Good day and thank you for the opportunity. I don't approach bookkeeping as transaction recording. I approach it as financial control. My role has always been to ensure that what appears in the books is not just accurate, but decision useful at a leadership level. Over time, that mindset has shaped me into a bookkeeper, senior bookkeeper with a CFO level lens, focused on structure, timing, and financial integrity. I started with the fundamentals: accurate encoding, classification or categorization of accounts, reconciliations, and compliance. But I quickly realized something critical. Complete books are not just always useful books. So I shifted my standard. Instead of asking, are the books complete? I ask, can leadership make a correct decision from these numbers? That distinction defines how I work. I've handled full cycle bookkeeping across multiple business environments, such as services, finance, real estate, construction, locally, and internationally on the property management and its operational businesses. My core platform is QuickBooks Online, where I've led full cleanup and reconstruction of uh, financial records, chart of accounts restructuring aligned to operations, then automated and recurring transaction systems, month and close discipline, accrual and deferral accounting adjustments, financial reporting, then aligned to decision cycle. But I don't treat tools as the value. I treat them as enforcement systems for financial disciplines. Because without structure, software is irrelevant. In one engagement, I work with an internal team managing day to day books. The effort was there, but the system was not. I did not start criticizing. I started by recognizing execution effort because, in my experience, failure in accounting is rarely effort based. It is system based. Uh, I told them directly, you are doing the work. Now, uh, we need to make sure that the system produces accurate output. Then I identify the core issues. No disciplined monthly close process, revenue recorded inconsistently across periods, expense recognition not aligned with accrual principles. From there, I enforce structure based on CAAP, formal month-end close framework. You have there the accrual accounting corrections, deferral scheduling for prepaid items, fixed assets, standardized QuickBooks online structure, and controls. Within two reporting cycles, the output shifted from inconsistent to reliable. More importantly, accountability became embedded in the process. Yeah, that's it. Not dependent on individuals. That's how is the control system works. That is the standard I enforce. One of the most critical areas of accounting that I focus on is margin integrity. especially when evaluating new products, or the organization may dive into expansion or diversion. Because revenue is not the metric that matters, margin is. So for a new product, margin is not simply price minus cost. It is a full financial reality check that includes direct goods or the service delivery, the labor or operational cost allocation, transaction, and the platforms that fees that were incurred, then overhead absorptions were basically applicable. When you properly structure this, I don't see just profitability. You have to see to it that sustainability is evident. And this is where most decisions fails. Because I've seen businesses launch products based on projected sales volume alone without understanding margin sensitivity. The risks that includes are very clear. First, there you have the pricing risk. If the margin is too thin, even minor cost changes eliminate profitability entirely. Second, volume dependency risk. If the business does not hit the projected sales, fixed costs remain uncovered. Third, cash flow risk. High upfront production or inventory cost can create liquidity pressure before revenue is realized. So my position is simple and direct. If a product cannot sustain margin under conservative assumptions, it is not scalable. It is speculative. That is how I evaluate financial decisions. Not optimism, structure. I work with a client who believed their businesses was profitable based on their reports, but they were consistently facing cash pressure. I did not respond with assumptions. I went into the data. What I found was a structural issues. Revenue was being recognized immediately, regardless of project completion. Expenses were inconsistent and delayed. No accrual framework existed for ongoing obligations. So vendors may likely complain. So I made the assessment clear. This issue is not accuracy. This issue is timing. And timing is distorting your financial reality. From there, I executed full transition to accrual-based reporting, monthly adjustment with journal entries implemented in QBO with their corresponding rules, then structured reporting framework aligned to accrual for performance periods or whatever are the actual ones. Then, once corrected, the financial picture changed completely. The business was no longer reacting to misleading profit signals. They were operating based on reality. That is what precision delivers. At a senior level, technical skill is absolutely expected. But what differentiates execution is leadership clarity. My approach is consistent. I acknowledge the effort to maintain engagement. I correct issues directly to eliminate ambiguity. And then I enforce structure so outcomes are repeatable. I do not over explain financial discipline. I implement it. Because financial leadership is not about interpretation, it is about control. In one case, I inherited books that were significantly delayed, multiple years and then months of unreconciled transactions under QuickBooks Online with unclear balances. I did not focus on how the situation developed. I focused on resolution. I suggest solutions. My directive was clear. We move forward in structure, not confusion. I executed a phased recovery, high impact reconciliation first, historical cleanup, and correction of those delays or accruals and deferrals, standardized monthly process closing, then ongoing reporting discipline. Within a short period, the system moved from reactive to controlled. And once control was established, consistency followed naturally. What I bring to a senior bookkeeping or accounting role is not just execution capability. I bring financial structure built in QuickBooks Online, strong command of accrual and deferral accounting, margin and decision level analysis capability, their KPIs, and then the KRAs, cleanup and system reconstruction experiences. So leadership discipline in financial operations should be in place. But above all, I bring reliability in financial truth. Because businesses do not fail due to lack of data. They fail due to lack of financial clarity they can trust. If selected for this role, my focus is direct. I will ensure your financials are structured, accurate, and decision ready. I will strengthen your reporting systems. I will enforce consistency in financial execution, compliant with IRS or any other regulating revenue bodies. And I will operate as a stable financial control point within your organization. I take ownership of financial integrity seriously because, in my view, numbers are not just reports. They are decisions in disguise. I guess that would be all. Thank you, and I'm looking forward to contribute at that level, and I guess let's just connect.